Snipers, you have to see what's happening in the Bitcoin price on Turnaround Tuesday. We have breached below our previous weekly open. Not a surprise for those that have been tuned into the Snipers channel. I'm going to quickly go over a four-dimensional analysis before we get into the live stream and answer questions from our live audience. I'm here again with Josh because we've had such a fun time bringing you guys content and value. But just notice right now for Bitcoin, we are breaching below 20,574, which is our previous weekly open. And so this was holding up slightly until now, and it's quite clear why this is starting to break with the DXY pushing up over 0.5% right now for the day. But more importantly, this is causing the S&P 500 to come down, and it's rejecting a very important moving average. If we go into the 4-hour chart, this 200 period moving average has rejected the S&P 500 quite a few times in the past ever since we've started to sell off. Notice how every single time we come towards this 200 period moving average in the past, we've been rejected. There was once that we were able to get above it for a short amount of time before we saw another rejection. And then since then, we've continued to reject this extremely important level. And Bitcoin being slightly weaker than S&P 500 as of recently is now starting to show its effects coming towards the big even of 20,000 US dollars. Notice how the Bitcoin against SPY chart is also inside of this descending triangle, which means that we could even potentially see more volatility with Bitcoin to the downside if we see continued weakness in the equity markets. And that wouldn't be a surprise for those that have been tuned into the Snipers channel, because we know for the first time ever in history, the Bitcoin against SPY chart closed a weekly candle below its 200-week moving average. Our current weekly candle is skydiving off of the 200-week moving average. You can see it doesn't have not even a wick attached to the 200-week moving average. So none of this being a surprise, we're going to start looking at the monthly chart as well because of the fact that we're breaching such important weekly moving averages, even on the Bitcoin against US dollar pairing. Our two last weekly candles, including the one right now, have been fully below the 200-week moving average, also skydiving and falling in free fall from that 200-week moving average. So there's a lot that we're going to discuss today, but just notice this. I want to also just kind of talk about this S&P 500 relief rally that so far you can see the initial rally was about 12% to the upside, and then we continued to form new yearly lows. The second relief rally took us about 10% to the upside. And so I guess the biggest question now is, from that first one being 12%, the second one being 10%, this one only being 8%, is that it for this relief rally before we see even more downside? Because it seems like every single relief rally gets shorter and shorter. First it was 12, then 10, now maybe 8% relief rally. As long as we continue to see downside here, this could continue to form new lows. That would certainly not be a good puzzle piece for Bitcoin, being the fact that they're correlated. So I think that there are a lot of things on the table, but one thing that Josh and I have been discussing in the immediate short term is the fact that we might want to be entering into a long position, because we do expect a potential bounce here at 19,798, where we have the 2018 previous all-time high. And this is a level that we breached one time, and this was when the Canadian purpose Bitcoin spot ETF sold off over 24,000 Bitcoin. We could consider this abnormal activity. Remember, it's 10% technicals, 10% fundamentals. And so if we were to just assume that Bitcoin was in a parallel channel right now, we could just take these two recent tests that we've had of the 2018 previous all-time high at 19,798. Notice how there's confluence here with this channel. Both of these areas got tested here. And then you can also see the midpoint of this channel, also a way to validate a channel, has held as a support in the past and also acted as a resistance in the past. You can see it also held here when we tested the previous weekly open. So the question is, now that we're breaking below the midpoint of this channel, is there a potential long position here if we come down to test, let's say, just above the $19,500 level? Maybe that even puts us just slightly below the $19,798 level. I mean, what do you think, Josh? Josh, you think we should be looking at long positions here? Because the S&P 500 hasn't yet formed new lows, And so I think that it could be a potential opportunity to be at least for margin trade to take advantage of the short-term volatility. What are your thoughts, Josh?
Yeah, 100%. I can definitely share my screen if you'd like and kind of cover more.
100%.
All right, cool. And basically, also with the live chat. So I'm at your channel. If I want to look at that on my phone now, what do I do once I'm on the video?
It should just pull up if you refresh the page
Okay, do I have to be
on
signed
the
in?
comments. It might be on the comments where the comments are usually at. I should say live chat.
For sure.
Wow, look at this
Yeah,
Bitcoin
we'll
right
look
now.
into that. For sure. So let me go ahead and share my screen, and maybe you can help me just look until I can pull that up. That'd be great. But let me see, and then I can just do it from now on. All right, so what I'm gonna do is I'm gonna share my screen, and we're gonna get down into it. So let's go ahead and
That's a clean chart, bro.
Well, I learned from the best, man. So here's the thing, guys. Here's what I think is going to happen. There's a lot of major confluence right here at this level. Let's just draw a horizontal line. We'll just call it this level right here. Okay. And the whole thing about this is it's a very historic level. Very, very historic. Let's go ahead and make it, line, and then we'll just, for ease of use, we'll just make it white, right? So if we zoom out, which once again, when in doubt, zoom out, right? So we're on the 4 hour right here. Let's just go ahead and take a look at that critical line on the weekly, kind of see where we end up. This is kind of an old chart, so you'll have to bear with me. But essentially, and I can pull it up on this chart too, but essentially this right here, this blue line, I'll just go to weekly so you can see it. This is the line of confluence that we have with the most weekly touches. And we're literally about to hit that level right now. And so we think that it could be a potential long opportunity. Even if it is a dead cat bounce, you can sell all over most of the position before the correction of the dead cat bounce. But essentially what I'm saying is yeah, I'm definitely going long. If we go back over here to the 4 hour, I just wanted to show you kind of that confluence. If we go to the 4 hour, this should be a little more clean because I'm trying to keep this chart a little bit better. But it's essentially this white line you're seeing that we're about to hit literally right now.
So you don't think we're going to come down and fill the CME gap at 18,440 before?
I believe that we could, but I believe we will at least have a dead cat bounce, before that happens. Or we could even come down a little bit before this line, and we could, because as it's broke below it a little bit, but it didn't stay there for very long. And to be honest with you, if we were to break below this critical level and test it and come back up and test it as resistance, then that would be something that would be incredibly, incredibly bearish. And in my opinion, you want to look out below because it's just such a critical level. I mean, it's the 2017 all-time high. So if we break past that again and we test it as resistance this time and continue further to the downside, it's going to be absolutely horrible. So what I'm basically doing right now is I see a potential long opportunity.
That's a very bearish 4 hour candle close. Wow. That's a very bearish 4 hour candle close.
Yeah, exactly. And so what I'm saying is I believe we're going to get a bounce at this level. And then what I'll do is I'll probably sell all over most of my position at the daily of previous daily of. It's 5 o'clock. Yeah.
I like that. One thing that is happening here is Jerome Powell is going to be speaking tomorrow. And so I think that a lot of people are watching the DXY right now. And I think that that's one reason it's pumping. We know the DXY, though, if we were to pull up the relative strength index, has had major bearish divergence over the last few weeks. And it's very clear here. You can see we had this high, this lower high, but
you want me to share your screen and I can stop sharing?
I'm on my screen. You don't have to stop.
If I hit stop sharing, it should work. Oh, okay, gotcha.
So you can see mine, right? Perfect.
Yeah.
So DXY, we've had a bearish divergence here, a higher high, and then we had a lower high here. So that ended up actually failing. We formed new highs, and then another bearish divergence. And so we do have Jerome Powell speaking tomorrow. I think that maybe markets are pulling back in anticipation of that. Equity markets are now down 2%. Wow, so they're continuing to sell off into the close, which is pretty interesting to see. And you can see here on the 15-minute chart, we're just seeing downside so far. And so that's really going to affect Bitcoin right now. Coming into the close, it's 4 p.m. What we'll typically see is New York will follow the macro trend, right? So the New York close at 4 p.m. follows the macro trend. And shout out to Uriel on our Discord for mentioning this. But then what we'll see during the Asian session is the opposite of what New York session did. And during the London session, it's always mixed. But Asian session, let's say right now we're dumping for New York. Asian session will typically pump. And so one thesis that I saw recently from somebody on our Discord is the fact that there could be, like you said, Josh, a dead cat bounce here, maybe around the $20,000 level, a retest of the previous weekly open, where we also have confluence with the daily open right now. And then maybe we see even continued downside slowly until we can get some strength in the equity markets, because at this point, the S&P 500 is really starting to falter here with that rejection of the 200-period moving average on the 4-hour chart. So I think that it'd be nice to entertain a long position here as soon as we get down to these levels where we've bounced in the past. But in the overall macro trend, we still have to be cautious of that CME gap here at 18,440 as a potential level to fill. And notice how so far when Bitcoin has come down to test the 2018 previous all-time high so far, it hasn't been forming higher lows. It's actually been forming lower lows. So we had this initial low, and then we had a lower low form. And so I think that it would only be, harmonious of the past to rhyme by forming another lower low, not a higher low, because it wouldn't be much justification for that. So I might start a position here, a long position here for Bitcoin, with a couple of areas to enter below. But what time is it right now? 4. So we've already got the equity markets closed now. So this could be the worst of it, right? I mean, this, here's the thing though. Look how bearish this 6-hour candle is right now. I mean, let's just look at the daily candle. Look how bearish we just closed. I mean, we'll see this even clearer. You're seeing this, Josh, right? Look how bearish the S&P. This is the SPY chart. Look how bearish this candle was today. I mean, if this isn't a, not just a rejection, but this is a bearish top. I mean, it looks like we're being slingshot back down to the downside. It's one of these. I mean, look how bearish that candle, resulted in when it comes to the price action moving forward. I mean, we're getting another one of these extremely bearish candles. I mean, my gosh, that's a bearish daily candle on the S&P 500, Josh. I don't know about you, but
that is, and that's the thing. That's the thing, It's like whenever there's blood in the streets, that's when you buy. So ideally you want to wait for those bearish candles in order to open up a wall, because it's only at inflection points that we are rewarded.
Well, if the S&P closed like this, let's see how the Bitcoin's daily candles
shape. But remember when the S&P closed bullish and then Bitcoin turned bearish?
100%.
So who's to say that the equity markets can't, close bearish, but then Bitcoin goes bullish? Because you have to understand, we're dealing with a traditional market versus, a 24/7 market. And inside that 24/7 market, there's a lot of other things that can happen beyond the time and scope of traditional equities,
I agree 100%. Hannah King.
I definitely think we're going down, and 20,000 is the buy target, as I've mentioned, in the past. If you do enter a little bit prematurely before 20,000, because maybe you're afraid it's going to take off without you, something like that, just make sure it's a very small percentage of your account, and then do what I call the Naeem technique, which is dollar cost averaging into a position on steroids, meaning that instead of just the same price of DCAing down on your entry, you're literally increasing the amount you invest as you go down. So the odds are more continuously in your favor. So that's something very, very important. I feel like people should know as well. If you draw that a diagonal trend line, so that's Ethereum.
Oh my God, no, Ethereum it's looking really bearish. I mean, it's breaking 1165 right now, which is
Looking bearish, but it's
a
also,
major support.
yeah, it could be a rising wedge or a rising channel.
A rising wedge.
And as soon as it breaks the lower line of that channel, things could look very bearish indeed. Hopefully that moving average supports it though.
Yeah, man. I think somebody asked this, Josh. What do you think about the DXY right now?
Well, I'd have to take a look at the chart. And the DXY is not 24/7, right? That closes as well at certain times.
The DXY, it has futures, so it's open during the week.
I think DXY is looking bearish, I think it could be looking pretty bearish.
There's a lot of bearish divergences. Let's just say that.
Yeah, I mean, we just had a huge pump. It's consistently making lower highs on the 4-hour. That's not bearish. I don't know what is. But that's what I'm saying. So that's why I'm entering a Bitcoin long, at 20,000, because I believe the DXY is going to go down. Typically, when the DXY goes down, that's when we see that increase in pump in other markets.
Yeah, I think something interesting with the DXY is it's really starting to move out of this range that has been here since 2014, right? So it almost seems like it's entering into this new phase where it did the same thing back in 88. I can't believe we're going back that far, but 88 to around 2000, I would even say even up to like 98, it kind of was stuck inside of this range here where it decided to move away from that range. So I almost would say that like what's happening right now to the DXY is similar to what happened here, where we started to move up into a new range. And so if we see something similar happen here for the DXY, it did break 20-year highs, we could be seeing a slow strengthening US dollar over the next few months to eventually peak out, right? And in the past, I mean, maybe we're looking at 120 as a possible target here in the macro for the DXY. But who knows? I mean, it's been forming bearish divergences, bro. And that's the thing. It's been forming bearish divergences, but it keeps going up. It keeps showing strength. And I think that it has to do not just with what's happening in the U.S., but more so what's happening abroad being worse than what's happening in the U.S., causing the strength of the U.S. dollar to move up. So I feel like it's more of other currencies becoming weaker versus the dollar actually becoming stronger. Because
yeah,
I mean,
that's what Brock Pierce told us. He said we're going to see a rise of prices in certain assets, right, like real estate, other things like that. And of course, there could always be a correction, but this was like what was it, a couple of years ago? So what he said was pretty spot on. But he said it's not that the property or whatever it is, or the Bitcoin, whatever you're talking about, is worth more money. It's more valuable. It's just that the dollar is weakening almost in a sense because they keep printing more and more of those dollars. So it's not that things are all of a sudden more valuable. It's that there's so many dollars in circulation that it just takes more of those dollars to equal that house or to equal that Bitcoin or whatever it is at the time, right? And so, I mean, I remember one time I was sitting, at your place when you were living in Marina del Rey, and we had a bunch of physical gold. I would bring over all this gold and all this silver, and I'd be like, Naeem, this is how you diversify a portfolio. And then we said, oh my God, it cost this much gold, back in this year to equal, that amount of Bitcoin. But now it costs like an entire desk full of gold and silver just to equal Bitcoin. It was pretty ridiculous.
I remember that, man. It's crazy. And it's funny because I was just looking at the gold to Bitcoin chart. It broke above the lows of 2017. I mean, this was the weakest that gold was against Bitcoin in 2017. And now we're breaking into that zone again, which Bitcoin topped out before even getting there. And so, I think it's going to be interesting to see what happens. But remember, gold isn't really a great investment for a great ROI versus just being something that's more stable, like you say, Josh. So, against gold, I think it's interesting to look at Bitcoin against the money supply. Do you have anything interesting on your charts that you want to cover?
Yeah, let me share what I was going to say, because I want to make sure people know that they don't just kind of blindly enter along at 20,000. I want to kind of cover more on the strategy. So I'm going to go ahead and share, and we'll go ahead and go here. And so this is what I wanted to go over.
Oh, it's testing the descending triangle previous resistance,
yeah,
huh?
But for some reason, it's being a little slow. I think my computer froze, so that's not good. But essentially, it doesn't matter because we can see perfectly what I was going to say anyway. So what you'll see, guys, is that blue line is at 20,000, just slightly above, horizontal. The red dotted line underneath of that is my stop loss. So I'm basically, we're looking at the 4-hour chart. So the whole thing is we're looking at the 4-hour chart. My stop loss is right here, okay? So it's right below the market structure. Remember, if that double top taught us anything, it's, have your stop loss a little bit above or below the market structure. So that's kind of what I'm doing here. And honestly, if it comes all the way down to this level right here, I want to be out of the trade anyway, because that could definitely indicate a trend reversal. And to be honest, I wouldn't even be surprised if we come back down and test this yellow line, which is where we bottomed out. I mean, that's the crazy thing about this, guys, is we had this yellow line drawn a long time ago. Like, it might have been, I don't even know, at least 2 years ago, something like that, on this chart. Like, this price action didn't even exist yet. And so the fact that we had this yellow line drawn for so long, because it's all the way back from 2020 is where it started. And then I just kind of left it there, and I was just kind of kept hoping, I hope this line never gets hit. I hope this line never
I remember
gets
you
hit.
told me, you were like, I don't ever think this line's going to get hit. I remember you said that to me back in the day, though. I mean, Bitcoin's at 50, 60,000. You were like, this ain't ever going to get hit.
I mean, even as long as we stay above this yellow line, we're still technically, and it's going to sound crazy, but we're still technically in a bullish trend.
Of course, 100%. Bitcoin's at 20,000. It wasn't
ascending line, So yes, we're going to have a whole bunch of crazy price action where we deviate against it, but essentially, that's what we're looking at here. And so we could very well, let's go back to, like, say, the daily. We could very well do a double bottom 17.5, because I'm thinking a double bottom right here at 20,000. And like I said, I'm going to be selling my position regardless, before it has too much time to decide. Because when you're day trading, you want to, especially if you're day trading in this market, guys, you got to get in and get out. Like, you don't want to be hanging around too long.
like a ice bath.
Yeah, exactly. Like a cold shower. You want to be in and out. So here's the thing. If that's basically it. This is where my stop loss is. This is the horizontal channel. This is the 0 line. And that's basically what I'm trying to say, guys, is this is where the stop loss is. Your take profit should be somewhere around, the weekly open. That would be a good take profit, because then you're selling it before it even gets to the middle mark of this horizontal channel. And so now the other thing I want to mention is that, if you were to enter around this period and you didn't want to wait for it to get to 20,000, something I have a limit order set right in the middle between my stop loss and, if I were to enter right now, my entry. And so that's one thing too to do to get a better average price, so that way, whenever things do reverse, then you'll be in a lot better shape.
I agree.
That way, if you're wrong, it doesn't matter, because your stop loss is right here below the market structure. If it goes beyond this, then you're gonna be screwed either way. So I'd rather just lose a little bit than lose a lot.
Yeah, no, usually when the S&P 500 has such a bearish close like what we're seeing right now, Bitcoin will tend to overreact with its initial reaction, and then you typically will hit an amazing entry for whatever that overreaction might be. In this case, since the S&P closed with a bearish candle, I'm assuming there's going to be an overreaction of this daily candle to at least come down, like you said, towards this level here at 20,000. And then by the time we see the new candle open up for 8 p.m. Eastern Standard Time, there could be a nice bounce there, a nice day trade opportunity. I mean, we're talking 4% day trade opportunity, 9x leverage, 40% upside right there, within a couple hours, right? So This is crazy. It's dumping right now as we speak. That's why we went live, right? Yeah.
Exactly. I mean, and what did we say, Naeem? I mean, all people have to do is go back and look at what we said was going to happen. We told everybody not to go long at that double top. Like you said, we spotted the double top before people even knew what the double top was. And so anyway, like it hasn't even played out yet, you know. And we front ran that, like we basically front ran that whole entire move. And then here's the thing: we said don't go long here, and basically, you know, and I've been saying the last 2 or 3 live streams, I'm going long at 20,000. I believe it's going to come down and hit 20,000, and look where we're at right now. You know?
Yeah, interestingly, if we also pull up, let's see,
because the fact that we would get rejected at the halfway mark told me right there that it was losing strength, and that combined with the daily double top. The other thing is, look how many daily times we touched daily.
Yeah, look at the Ichimoku, bro, on the 4-hour. There's strong support here and confluence with a potential. I mean, you can call it a double bottom if we were just factoring this low.
20,000.
Yeah.
Ichimoku cut. Touches it has. That's on the 4-hour. That's a high time frame. Look how many. Count how many 4-hour candle touches. You know, or they were very close to that. You know? So the Ichimoku is saying go long. Basically, is that what it's saying?
It's saying at 20,000 there's support. You know, if we break down from here, then things could get really ugly.
Yeah, that's the thing, and that's why
that's where that CME gap comes in.
Yeah, and that's where Naeem and I are kind of joking a little bit about how, you know, if it breaks down too much, we're just going to open up a short. But
it's when you, when it dumps and then you, and then it keeps on dumping.
20,000, and we could be setting up for a massive head and shoulders, like. You know, the left side right there.
That's what a lot of people are saying, man.
And we're gonna have we're gonna print another shoulder. So I'm banking on the fact that, you know, I'm basically banking on the fact, yeah, we're gonna get a bounce at 20,000 and possibly complete a head and shoulders, but by then I'm already gonna be out of that trade. And then, you know, if it dumps, then you just buy it back again at 17.5.
Well, how's volume looking? You know, let's see volume, because we knew this move was coming based on the volume. Because I don't know if you guys remember this, but we talked about this yesterday. It was very clear what was happening here because we had the previous weekly open, and we knew the algos had orders set below the previous weekly open, which is the green line. And so we saw this strong amount of volume come in. This was obviously the institutions or the whales that are currently selling. And then they decided to stop selling right above the previous weekly open. And then it wasn't until we came down quickly to test prices below the previous weekly open that we saw some of these buy limit orders get triggered. And so we knew that there was still a lot more sell pressure than what actual buyers were in this area. And so it wasn't a surprise that we had a cup of coffee here before we started to see further sell-off. And now that we broke below the previous weekly open, it's actually less volume than what brought us towards it. And so I think that's a good thing, descending buy volume or sell pressure right now. And yeah, this whole move is actually low volume. So, you know, it could bounce at any point. And it is approaching the 2018 previous all-time high, which you can't deny. It's definitely a big support level. And I've seen many traders talk about potentially going long here because of the fact that the risk to reward is so attractive, you know, because just here at 20,000, you know, we're talking a 1% risk to over 10% upside here based on where price has been recently. And so, you know, I think that there is a potential day trading opportunity here, but in the macro, we're still not out of the woods. I think that's very clear. Who News says, do you guys think Chainlink is a good long-term hold? Do you think we can go under $3 for the bottom? You remember Chainlink when we were in Wyoming, right, Josh?
Yeah. The thing for me is, like, no matter how good the technology is, if the chart isn't going up, then it doesn't matter. You know, from like a technical analysis perspective and just like a making money perspective. I mean, because there's still a lot of valuable technology that helps. A lot of people are helps with.
And the technology will still work regardless of what the price is, right?
Exactly. And we're trading based off of price action, not technology action. Although usually there is some type of, preferably unique advanced technology associated with the price action, but it doesn't always happen.
Yeah, I agree. I think altcoins could still pump a little bit just based on this chart here where it looks like we still have a little bit of a ways to go, but I wouldn't count on it breaking back up just yet. I think that overall we're starting to slip, and that's all going to be determined based on the Ethereum to Bitcoin chart, which is already slipping. But, we did get a lot of volume here on the weekly chart. Enough volume to justify potential reversal, actually. So we'll continue to monitor that. And then I think Bitcoin to SPY is what's most concerning to me, because at this point we are skydiving off of the 200-week moving average, and that is never a good thing. It's a level that has held very strong in the past. And so I'm not sure why this is the case, and that's why I've been saying it. We either have a massive bear trap here or a massive dump. And let's hope it's a bear trap, right? You certainly don't want to be too bearish at this point with how much we've already retraced, because, in bear markets, what have we seen in the past? 85% correction. So, are we going to come back down to this range here? Who knows? I mean, if that's the case, that fills the last CME gap for Bitcoin at 9,665, huh?
Here's the thing. When the time comes to buy, you will no longer want to.
Exactly. Omar says, see you later. Good to have you. Oh, are we going to retest 17,000 by the weekend? I don't think that's justified right now. Unless we see equity markets form new lows, it would be hard to see that happen to Bitcoin. But I don't think it's off the table if we get below 20,000. I think that we're certainly not out of the woods yet. We cannot assume that this dump is over, especially after what we talked about yesterday with Bitcoin failing to get to 24,000. That was a very clear sign of weakness. And Ethereum was able to surpass. Yeah, I mean, with Ethereum surpassing this recent high, Bitcoin, it wasn't able to do that. It wasn't able to surpass its June 15th highs, so it theoretically should have got here, but it didn't. Like the S&P 500, as I've been saying, June 15th candle high, it should have gotten up here, but it didn't. And so that tells me something is fundamentally off with Bitcoin. That tells me that there's something going on. I think it has to do with Celsius, to be quite frank, just because you still can't withdraw from Celsius, and they still haven't announced that they went bankrupt. They still haven't announced a freeze. And so I think that that's still in the air, and that's a big issue right now that is in the market that's just kind of holding us back fundamentally. Because if Bitcoin does end up coming up, Celsius has the chance to not go bankrupt and to maybe stay solvent. But whoever the bad actors are right now seem like that's not what they want. I think they want the opposite. I think they want them to become insolvent. And for that to happen right now, their liquidation price for their WBTC position on MakerDAO is at 13,900 something. So, Bitcoin would have to get down here to liquidate that position, and that would most likely make Celsius insolvent and bankrupt. So, I think that the fundamentals are certainly playing part here. Naeem, ETH pumped too much. That's what he's saying.
That's great analysis, and that's another thing I want to point out too, is for those that may be going long at 20,000. You want to wait for a confirmation of a bottom before you just try to catch a falling knife, right? Because that's something you want to do for sure. You want to wait for at least a 1 hourly candle confirmation of what you believe looks like a bottom before you put your money in. You don't want to be the first guy in, you don't want to be the last guy in either, right?
Exactly. Trade says, I think Bitcoin will go back up to 21K before going to 20K. Interesting.
Well, let's just put it this way. I hope it goes back up to 21K, because then that means I made money.
Silva says, what time frame do you guys use to trade?
Okay, so what I personally do is I like to look at the weekly. I look at the monthly, then I look at the weekly, then I look at the daily, then I look at the 4 hour, then I look at the 1 hour, and then I look at the 7 minute, because the 7 minute gives me more information than the 5. And that's how I personally do it. But, you know, other people have other strategies.
Yeah, it really depends. If you're day trading, you can go as close to 1 minute, 3 minute, 5 minute. And then when I'm looking for confirmations, when we're starting to breach major levels, I'm always looking at the hourly and the 4 hour. My favorite time frame, though, my favorite all-time, you know, time frame is the 6 hour chart, because that to me is what I call the institutional time frame. You'll see things on the 6 hour chart that you won't see on any other chart. And I'll give you an example of that. When we first found a bottom here on the 18th of May or the 19th of May in 2021, when Bitcoin came all the way down to 29,000 to then eventually form new all-time highs after that, what you'd notice is on the 6 hour chart, look at the volume. The institutions printed their volume on the 6 hour chart. You saw a massive amount of buyers come in here on the 6 hour. But then if you went on this 4 hour chart, the chart that most traders are looking at, and go to the same time frame, it looks different. It looks like there was more sellers than buyers. It shows a huge amount of sell pressure. And so that fooled traders. And I remember when we were covering this on our daily updates, I said to you guys, I said, I know on the 4 hour it looks bad, but that's not what matters. What matters is what happened on the 6 hour chart. And the 6 hour chart shows the complete opposite. It actually shows a very large amount of institutional buyers that came in. And so the institutions will hide their volume on the 6 hour time frame. So that's why I call it the institutional time frame. Because if you would have seen this on the 6 hour, then you would have known this was the bottom. And then eventually it became the bottom. Do we have anything similar right now in this price range? Well, we did get a lot of buyers on the 6 hour time frame, but certainly not as much volume as we've seen in the past, right? So during the bear market slash I would call bull market, because this, some people consider the $64,000 top the real top, not the $69,000 top, which makes sense because Grayscale Bitcoin Trust, you can see it did not surpass the high that was formed when Bitcoin hit 64,000. Even though Bitcoin went higher in spot price to 69,000, it didn't go further on the GBTC chart. And I believe also on Bitcoin against the money supply, we saw a perfect double top, which was very interesting. You can see here we had a pretty convincing double top here against Bitcoin against the money supply. Let's look at Bitcoin against the SPY. Yeah, Bitcoin against the SPY formed a lower, so a lower high. So you know, it's fairly interesting to see some of the ways that Bitcoin topped out and to argue which one is the actual top, right? Let's see. Hannah says, I opened a long at 21.4K. Really regretting it.
Yeah. Well, you should have watched our live stream when we told you not to go long.
Yeah, we 21.6 or 4K was, what was that?
That was pretty much the double top.
That was the double top. Yeah, I did mention potentially doing like a buy stop here. That turned out not to work out. If that was the case, I didn't end up doing it because this just wasn't when I was on the charts. But this was a really ugly move here, in my opinion, because we definitely trapped a lot of bulls that were buying the breakout, expecting this to maybe even follow the S&P 500 and actually show some strength. But
yeah, I think what you were talking about opening up a buy order a little bit higher than a double top. So if that was if people would have followed your advice, they would still be okay because that order would not have gotten triggered. But you're absolutely right. It did come in a little bit, more bullish on the. You could call it a bullish double top, I guess, because the second top is slightly above the first. But what you were talking about is more of a breakout higher up. So if people would have taken your advice, they still would have been doing the right thing. Because honestly, if we would have broken much higher than that, then that would have indicated, volume supports it that that we should go long. But yeah, the safest bet is always, is 20,000 right now.
Yeah, and on the 15-minute chart, we didn't get any confirmations. We actually got a bearish rejection when we got above that level. A very bearish 15-minute candle came in. So that's why the candle symmetry is very important. So let's see what happens. We're gonna wrap up this live stream here soon. We just wanted to get on while Bitcoin was moving down. The equities started to close. But are there any other questions, or do you have anything, Josh, that you'd like to cover before we wrap up?
Trying to think. I think that's basically it. Really 20,000. If we get stopped out there, I told you guys what my stop loss was, then the next long opportunity is at 17,500. And so you just want to always be smart about your trading. You always want to wait for confirmation of a bottom. Like when it hits 20,000, I'm not just going to blindly enter because, oh, look, it's at 20,000. I'm going to start observing the way it behaves at 20,000. And the moment that I have a 1 hourly candle confirmation of what I believe looks like a bottom around the 20,000 mark, meaning that it just makes, at least higher lows and higher lows, higher lows. Usually after the first one, maybe two higher lows, that's whenever I get in on the dip on the 1 hour, because that's a small enough time frame, but it's big enough to where it actually showcases that there could be something other than a fake out. But essentially, that's what we're looking for, guys. So just be very careful, observe things, because we might just blow past 20,000 and then just hit, and then 17.5 becomes the macro double bottom, which is definitely in the cards, especially if we come past 20,000 and test it as resistance, we better look out below. And so, so just be aware of that. There might be a few people here that are advanced traders that might be, waiting for it to pass 20,000 so that they can short it, the moment that they see that 1 hourly candle confirmation of a resistance against 20,000, right? So that would be a potential short opportunity with your stop loss right above 20,000. So it just kind of depends on how you want to play it, what side of the fence you're on. But I believe we're going to get a bounce. But if we don't, then that doesn't mean that I'm not going to, or that doesn't mean that I'm just going to automatically enter the trade. I'm going to wait for the confirmation. And that's the biggest thing I want to tell our viewers today, because a lot of people just kind of limit order their way in or out and just kind of, catch falling knives. You don't want to do that.
Somebody said, Alp said, I think Joshua believes that we're going to see 17K.
Well, here's the thing. If 20,000 doesn't hold, then yes, I believe we're going to see 17.5. So let's all hope that the 20,000 holds.
Well, here,
it's a very short time to trade, right?
I'll put this out there. I mean, if we were to just do like what we do in our daily updates for our channel, I would be saying right now Bitcoin is inside of the range with a resistance of 23,795 and a support of 17,204. And so that's the range that we're currently playing in. And it's not a surprise, as we've always talked about on this channel, that we are currently at the midpoint of the range, because that tends to act as either a support or a resistance level. And so I think there's still a chance at any point Bitcoin can come down to 17,204. I think the only reason that would be justified is if we continue to see weakness in equity markets, which I don't think we could have had a more bearish candle close for the SPY today. As a matter of fact, this bearish candle is literally the same type of candle that closed here, and that resulted in a massive dump for not just the S&P 500, but also for the cryptocurrency markets. And so, it's going to be a very interesting 24 hours, to say the least. Bitcoin tends to overreact, and so there is some opportunities for a long. I would not be going short here. I think that Bitcoin, as we know, has been underperforming the S&P 500, and so it could at any point see abnormal volatility, and that could potentially even be to the upside, especially with this weekly candle. It's still fully below the 200-week moving average. Let's see what happens. This is either a massive bear trap or a massive dump in the works, in my opinion. but the range that we're in has a resistance of 23,795 and then a support of 17.2. So let's see what happens there. And I think that's good for today. We'll continue to update you guys if we see anything happen in the immediate short term. But do you want to wrap it up, Josh?
Yeah, I think everything you covered is great. I mean, it's information that can't really get anywhere else. You're presenting, unique information, data. I mean, Naeem is literally like the best analyst in the world. Like that's why I reached out to him to learn from him. So I think everything you said is more than spot on. And yeah, we can definitely update some people, once we, especially on how our trade's going. If we get that 1 hourly confirmation candle at the bottom at 20,000, and we can update people then. But essentially, yeah, that's the game plan. Not much to risk, but there's a lot of reward.
I love it. Somebody said next live stream, when it matters the most. That's when the next live stream will come. When it matters the most. It could be in an hour. It could be in 12 hours. Let's see. I think that the equity markets did make a bold statement today, and that could cause a lot of volatility for Bitcoin. It's really approaching this major support. So, maybe on a first test, there's an opportunity to long here, and then move your stop to break even. We have to wait for more answers, see how the S&P wants to open up. Futures will be open. We're only halfway through the week. Jerome Powell speaks tomorrow, and so I think that we're front running that move right now. So let's expect some volatility as well from that. And then we have CPI numbers coming out next week on Thursday, I believe. I think that's also something that the markets are anticipating to see if inflation is going to continue higher. Because if it does continue higher, then that would obviously not be a good sign for the markets, and we can continue to see more rate hikes. So thank you guys for tuning into the Snipers channel today with Josh. We're very, very grateful to have you on, by the way, Josh. Thank you, man, for serving us and adding so much value to the channel. People love hearing from you, and his channel link is in the description below if you've yet to subscribe to his channel.
Thank you, guys.
Thank you, guys. Snipers out.